So first, let's take a snapshot at what happened in November. We're taking a look here at sales and average price. And Matt, I want to jump right down to the year over year because the numbers up top when we're looking at a monthly basis, it makes more sense to you, I think, when we look month over month so you can see a direct comparison. We're going to get into that when we get into our specific municipalities. Let's just look at the overall totals. And I think looking year over year makes the most amount of sense. So when we look at the detached housing market, year over year, we're down 14.8% in terms of sales volume. And really, the 905 took the bigger brunt of the hit there, down 16%. Semis, not as big of a hit, but again, the 905 really taking a hit there. And it's funny enough, the 416 showing a positive boost there year over year at 1.5%. So happy to see that. And then moving to the condo market, the down 21.7%, I think is pretty stark because we were already starting to feel that struggle last year. And I know we're going to get into this, but when we pop over to the average price, condo market didn't take as big of a hit as you would have expected when we're looking at some of the other numbers.
One of the big giveaways just on this chart alone is that sales were down 21.8%. So we're dealing with a lower amount of sales to be averaged or medianed out there. So that does have an effect on what potential price you might see. But there was definitely a difference between the 416 market and the 905 market. 905 market saw we were down 8.7%, but in the 416 it was 1.7%, which was the best. It held up better than the detached, semi, and towns. But I think we do have a chart on why that might be.
Exactly. And acknowledging that they've already taken the big brunt of their hits so far. And I think what's important to take a look at this is the initial outlook in 2025 was that we'd clearly hit the bottom, that we were in that trough. Maybe we'd even see some recovery this year. Like the Treb forecast at the beginning of this year was showing positive gains, a little bit in price, more so in sales volume. Now, obviously, sales volume has dramatically come off of that, and we felt that. But the prices have continued to slide a little bit more than I think was expected come the start of the year. Now, obviously, we had a change in government down south. We've had this tariff trade war going on. And so what's important to just note is here's the actual impact we've seen because of those changes. And again, when you're looking at detached year over year, people that bought this time last year, they're down 8.8% on that purchase. When looking at the semis, down 7%. And again, the bigger hits really coming in the 905. I will say I was a little surprised to see detached 416 average price down lower than the 905s. And the important thing that Matt and I really want to bring to your attention over the next couple slides, and with this chart in general, is Treb's using average price here for this particular chart that we're showing. Median price is more reflective of what we're actually feeling in the market. When you go to the composite benchmarks and all that, even better. But for now, just know that there's bigger swings here. And as Matt was talking with the condo, it's a little bit more of that luxury side where we're seeing the change. And so we'll get into that. But Matt, actually, why don't you start right in there? Why don't you talk to us a little bit about why we're seeing that softer slide there in terms of pricing for the condos than what we might really have felt?
So if we look at the top chart here, the blue dotted line is your average price, and the red bar line is the spread between your average price and your median price. So the chart below it, you can see the median price in the orange, the average price in the blue. So what we're seeing is a significant disconnect between your average price and your median price. And what this kind of means is that the luxury high end of the market is doing more of the heavy lifting when it comes to the average price point. We can see that the real market has stagnated down below there, but for whatever reason, we saw quite the uptick in luxury condos, or at least some of the bigger condos, your 3 bedrooms, family size condos that were doing most of the price gains in November.
So you can see as we trended through 2020, median average price stuck pretty well in line with each other. And it's really just been in 2025 that we've seen that divergence that Matt's talking about, where you've seen a bigger spread. And when you take a look up here, we're over an $80,000 difference between the median and the average price. So it's important to note that and then ask ourselves, why is that happening, right? How is the average getting so skewed in comparison to what the bulk of homes are selling? And the real reason for that is those luxury homes or those higher price condos are doing quite well. Well, I don't want to say quite well, but in comparison, we're seeing more of those sales as sales volume has dropped off. who's buying the condos now? We're seeing more family style condos as opposed to investor condos selling. The investors have essentially left the condo market right now, and we're not seeing that stuff move unless it's at a pretty discounted price.
The one good thing about this chart, though, is it does appear that the median price has stabilized throughout the year. It's gone quite sideways here, so it is possible that we are starting to see at least a floor develop when it comes to the condo side, at least in the 416 in Toronto.
Well said.